Brokerage, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the quick stroke market analysis show where we look at daily technical charts and try to understand what happened in the market and try to plan for a better trade for the upcoming day. That's tomorrow, December 13, Wednesday 2023. If you're not subscribed, please subscribe and share to your friends and colleagues so that it reaches out to max. Thank you. So we had some kind of a pullback, a red day, right? Traps on the bulls from the Nifty. We have a Fed event that's upcoming, and so the market is still consolidating at the top, at the very top. In fact, today made a new all-time high on Nifty, and that's after which the trap happened. So let's get in the charts. We have the wrap-up. We'll come back here, but let's look at the charts right away. Here we go. So let's look at the candlesticks first, and that clearly shows that this is a trap. It's a wide range bearish candle right at the top, right at the top. We had been consolidating since quite some time. That's 5 days to be precise. That's a Nifty. And coming to Banknifty also, we have been consolidating since 6 days. And what kind of candle do we have? Wide range bearish candle. That's followed by an indecisive hammer or doji, inverted hammer or a small body indecisive candle on the top, following a big range green candle, and then today we had this red. So this is clear retracement or reversal candlestick pattern that's shown on Banknifty, right? So there could be more reversals that could come, retracements, right? Because we have moved up a lot. Vertically we had been moving up, but after that it is 5 days of consolidation. Now let's see what happens. That's what candlesticks and patterns are all about. Now remember, we are on the top of a trend line channel, and that's where we have 5 days we had been stuck, but still making all-time highs. Today it made an all-time high above the previous candle's high at 2037 nearby, and then trapped the bulls and then went below previous two candles or one candle. Previous candle. So it's bearish, so still consolidating. So to keep a watch on this 2844 the next day. If that breaches, right, then we probably are moving down more. Right, that's on the Nifty we're talking about. The Banknifty similarly, we have to keep a watch on this gap, 46,500 zone. That's where we bounced up and moved up and then coming down. So that's support is 46,500 is breached. We have a problem. Otherwise, we're still consolidating, moving up and down in this, how much, probably 1,000 point range and a 200 point range on Nifty. That's what we're doing. So if we look at the levels, all-time highs, first resistance at 2140 nearby, then 20, every rounding number, so like 40, 21, 30, 40 basically in Nifty. After that, 2100, 21, 200, 21, 300, and major resistance will come at the Fibonacci extension of 78. That's 21,500. Now, downside, keep a watch on this 2850 nearby zones breach. First support will come in at 2700, that's a gap. Then you have Fibonacci 23 retracement, 2500, it's a rounding number also. Following that, you have 2300, it's a gap also. Right, in confluence with the 20 exponential moving average, also that's on 2338. So that kind of a good support for the coming days. Now Banknifty, come to that, taking the all-time high at 47,600 to the first hurdle, and then after that 47,800 would be Fibonacci extension from the previous lows, and major support will come in. Support will come in at this 46,500 as I said before, right? And if that's breached, that's a gap. That's breached means that 20 exponential moving average support will come at 45,500. In between, you have the previous 38 retracement that's coming at 48,500, right? So 46,500 to 45,500. In between 45,500 also can come in the support. I'm sorry, I'll repeat that once again. The gap 46,500 and the 20 exponential moving average and the Fibonacci 38 confluence is coming at 45,500. So the two major supports. In between we have 45,800 and 45,650 coming as interim supports also. That's on the downside. Upside, I already said it's 4750, 48,000 would be the major resistance on the upside, because that could be a Fibonacci 78 retracement. But first hurdle would be to take out 47,600, which is the previous all-time, right, current all-time highs, right? So that's support resistance. Let's quickly wrap up and see what happened today. So it's a less than half a percent, 0.46% down on Banknifty, 0.43% down. It's 200 points, and how much is that? Yeah, 90 points and 200 points respectively is what the reversal has happened. It's closed negative, still consolidating at the top, all that, right? Intraday was trending down more actually, right? Resistance levels we have seen. FIs were buying since the last few days, and actually 2 days, and previous 4 weeks net to net in cash buying is what is happening for the institution. Just consider today's data is not coming. Mostly they might have sold something or not. So there was profit booking by the domestic institutions. Probably today also domestic institution might have made profit booking, and we never know. Don't know the data from today, but definitely it may not be buying from the FIs today. But yeah, the FIs have turned slightly bullish on our markets, and money is slowly falling in since last 3-4 weeks, which is why the market has moved up. So hopefully that will come back after the major event that's happening tomorrow. So momentum indicators and trend indicators are trying its bullish still, but the bullishness is slightly slowed down. It's falling strength that is seen. Bullish zones, momentum, short term, daily trend, no problems. Bullish still on both the indices, and DMI negative trend, a positive trend. India is kind of flattish in 12 points. Nothing is happening. It's not cooling off at all when the market is moving up, right? And it's not rising when the market is falling also. It's kind of weird behavior. But the thing is that the implied volatility versus realized volatility, that spread, the difference between the spread is right now in a mid-range of 30 to 50%. So that this may be the time that is suitable for selling. But still on the top. It's not too much or not. It's in the midway. So that's something that may be helpful for the call sellers or the option sellers primarily, as long as it remains in that 50% spread of realized and implied volatility. So Bollinger Bands, if you study its upside expansion, that's continuing there. It's still not contraction, still not started, although we have a slippage from the from the top. It was walking on these bands. This is the bands, Bollinger Bands that we're talking about. So it has slightly slipped from walking. That's something on both indices, but still the expansion is intact. That means still Bollinger Bands is saying that more could come in, more on the upside primarily still. Technically, so it continued to be extreme bullish. We are at all-time highs and consolidating, not falling up too much. Today is a great day, but yeah, it is still consolidating. You're seeing that. So all the sectors, actually only the metal, actually closed green today. All the other metal sectors are flattish or near to 1% fall. So except the pharma, all the other short-term bullishness from the momentum perspective and short-term on daily charts are still in the bull zones. No momentum is preserved except the pharma, but a slightly fall. Now the heavyweight stocks, there's some slippages has happened. ITC, Reliance, and Fyers short-term momentum has slipped into the sideways. They're all bullish, but still have other leaders. Market today, none of them performed over except for TCS. Everyone was right. So US Windows are on the top, and it's made in the green, and tomorrow we have event. It could happen. It's at the very top. It's very close to all-time high. So it is a ding wedge. Slight time for some caution. Dollar has fallen, cooled off. Crude oil has cooled off. Rupees remaining still weak. Gold also had retraced and set resistance, still on the top, not fallen, hanging on there after it hit the all-time highs last week. So tomorrow we have the Banknifty expiry. The levels that seen are 46,000 and 47,500. Let's go back to the charts once again and see what's tomorrow's levels. So 46,500 is a gap support, and 47,500 on the upside. So if this, most likely it will be 46,500 that may find some support because it's a bearish pattern that's formed. It's less likely that it goes above the 47,000 resistance, right? Unless something big news comes in, right? Yeah, so that's his charts about saying that, and then same is being told by the open interests of the options, right? And the PCR is not bullish enough. 0.80 PCR for the Bank Nifty tomorrow, Wednesday for Bank Nifty expiry. So pullbacks are happening. Market is on the top. It's an opportunity for investor to make some value buying if it's falling down, and further for each dip of 1%, 2%, 3%, depending on what you want. You can go for quality stock and as IP mode buy. But still remember the market is at the very top. It might not be wise to buy at this time. Wait for some correction to happen, some retracement for value investing. But otherwise, it's momentum investing, breakout investing, and all that. Trailers direction is very clear, but consolidation is what's happening. So cautious about that. Profit book will come. Market is on the top. Yeah, the Fed driven volatility, things will come in. Be cautious about that, right? Manage your risk, hedge your positions, and play it safe. Cut short your position size if the VIX is further spiking. VIX is spiking is a concern. You have to be careful. Patterns are slightly turn negative. Consolidation is and direction, everything is fine, but when it is on the top and showing, giving candles that's showing bearish signals, you have to be extremely cautious with the position size, especially derivatives, right? I hope this helps in some way. That's all I have. If you're not subscribed, please subscribe and share difference in colleagues. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.